And a lot of people want to get into investing. But if you're in debt and you're paying 20% interest, 30% interest on a credit card, maybe 40% on a hard money loan, the last thing you should be thinking about is investing in someone else. You need to be investing in you and paying off your debt. Because if you, let's say you have an extra $100 and you're putting it into your 401k that may be earning something, maybe it's not. But that $100 would serve you a lot better if you used it to pay off a 30% credit card, because now you are making 30% return, which is an incredible return. So before you get into investing, make sure you're actually paying off your debt, because once your debt is paid off, that's going to free up a lot of money that you can now start investing. Yes, maybe you missed out on the stock when it was $10 and now it's 12, but at least you got out of debt. And now you can make up for it. As long as this works great, as long as you don't just go back into debt after you pay it off. And I see that happen quite a bit.